Let me rewind the clock for you and kind of give you a picture of how we sit this fine Thursday morning. On Tuesday, Jerome Powell came out in front of the Senate and basically said we are going higher for longer and quite possibly faster. That caused the market to finally capitulate a la Jackson Hole meeting and say, okay, we get it. We started hearing more and more about 50 basis points. And now we have more and more people talking about a terminal rate at 6%, and even some talking about a terminal rate at 6.5%. This is exactly what Jerome Powell wants. Jerome Powell wants the market to be nervous. The market needs to adjust. The market needs to take him serious. And then we just get Bernanke with a quarter point. On top of that, we got the new weekly jobless claims today, about an hour or two ago. And for the first time in 9 weeks, yes, folks, 9 weeks, we got a number that beat and was over 200,000. Remember, we have been guessing, estimating that Powell needs the weekly unemployment claims to be over 300,000, quite possibly as high as 325. And unfortunately for him, we have been under 200 for 9 weeks. Today, folks, we got 211,000 new jobless claims. That is a 9-week high. That is higher than estimate. Estimate was 195, and last week was 190. So again, Jerome Powell, in my opinion, is smiling. Now, of course, we get the big gargantuan jobs number tomorrow. Will it be close to the estimates at 225? Will it be the 307, which I think was my guess from a week ago? Will we get a revision to January's blockbuster and total BS number? Stay tuned. We will know tomorrow at 5:30. But as we sit here this morning, Jerome Powell is smiling. Jerome Powell is frankly winning. Again, he is trying to get the market to take him serious. And with the 2-year at or over 5, the 10-year at or near 4, the stock market, had a 500-point down day the other day. He feels like the market is listening, just like we've been talking about, just like Jackson Hole. So again, one data point, we get a monster tomorrow and we get a really big one on Tuesday with CPI. But again, I think Powell is smiling today. Weekly unemployment claims, we just talked about it again. This is a weekly number that you and I get to look at. And we can look at and quickly judge, is Powell smiling or is he frowning? Again, he doesn't want to see a huge spike a la March of 2020. He wants to see a slow cadence, which again will allow him to go slower and eventually pause. This is why I don't think Powell has the backbone or the cojones or whatever you want to call it to go 50, because he has already given us 450 basis points and he knows the lag effect is coming. So he wants to talk tough. He wants to create fear. He wants the billionaires and the money managers to talk about 6 and 6.5 and all of this stuff, all while the housing inflation comes down August or September. Remember, we may get another record hot housing number on Tuesday, but it will eventually roll over. It's just how math works. And I really believe Powell is trying to buy time to get us to that housing deflation. I don't think Powell goes 50 because he knows housing deflation is coming. But again, it will depend on Friday's jobs number and Tuesday's CPI reading headline. If headline comes in at or near 6.4, 50 is on the table. I think there's a good chance we're at 6.1 or quite possibly even 6. Because again, the base effect, these numbers rolling off, actually are in our favor the next 3 months. But we shall see. 1031 exchange. Looks like Joe Biden, yes folks, Joe Biden is coming after real estate. Real estate has this thing called like-kind exchange. It allows you to sell a rental and buy a different rental, take all the equity from A, move it to B, As long as you follow the rules and the timelines and all of that, you can do that tax-free. Again, this is something that I'm sure real estate investors and realtors and NAR will be up in arms about. If you go back on our channel, because we've been doing this daily stuff for almost 4 years, you will see this is not new. Joe Biden in every budget, I believe this is his third budget. It might be his second, but I believe it's his third budget, has gone off after the 1031 exchange every time it gets taken out. Why? Shh. Something like 65% of Congress in the Senate own real estate. Shh. Don't tell anyone. It just is what it is. So again, it's out there. It could go away. It would be a problem for some, but not for many. It is something I have leveraged to the fullest. If you read my book, One Rental at a Time, you know that I did, I think it was 7 1031 exchanges in my growth from 8 units to 80 units. The 1031 exchange is amazing. There is some timelines and rules, but if you can execute it, it is quite powerful. Housing recession. Looks like more and more folks are starting to follow this channel. This time, Liz Ann Saunders, Charles Schwab, chief economist strategist, is now saying the U.S. housing market is in a recession because of transactions in home building. We brought you that, I don't know, 6 months ago, 8 months ago. Glad to see people coming around. Also, Liz Ann Saunders is talking now about a rolling recession. Where have you heard that before, folks? Again, remember, there are some industries like housing, like autos, that are very interest rate sensitive. Others, like services, hotels, airlines, that are not as much. I'm really happy that the economists that are named around the country are coming around and watching One Rental at a Time. And then finally, inflation will cool much slowly because, again, there is goods and housing and wages. Who has been trying to help you understand the 3 components of inflation for probably 18 months? This is how long we have been talking about this. But yes, folks, Liz Ann Saunders, Charles Schwab, chief economist strategist, is now talking about all of those important factors. That is awesome. The 10 and 2. The 10-year and 2-year yield inversion, folks, has gone over 100 basis points. I haven't checked this morning, but as of yesterday, 1.03 or 103 basis points. This is a record going back to 1981. Why is 1981 important? Because again, I have been highlighting, especially in housing, what happened when we had interest rates grow, we had yield inversion. What happened? Transactions ultimately crashed 50%, 40% in the first 2 years, another 10% over 2 years, and unfortunately, it took 18 years to come back. Yes, 18 years of pain. Agents, brokers, understand this is going to be a slow grind as interest rate lock-in is real. We are going to see the average age of homeowners or average years of occupancy grow and grow and grow. It was 8 years, but we will have more, and we are going to have people actually pay off their mortgages. Think about that. Most of Americans, or many Americans, would always do a cash out refi, use their houses as an ATM. Guess what's not going to happen? They are not going to get rid of that first. They may take equity lines or credit lines or something like that, but they are not going to be getting rid of that first mortgage. Do you know what the record is? So the yield curve inversion at 1.03% is a 42-year record. That means 1981 was worse. Folks, the 52-year spreadsheet is amazing. If you haven't gotten, go get it. It's free in my course, my free course. Go get it. It's in the bonus section. The record in 1981 for yield curve inversion was a monster 250 basis points. I think it was actually 247, almost 2.5 points. That means the 2-year was 2.5 points higher than the 10-year. Now, why could that be? That's because we got Paul Volcker and people knew a recession was coming. And we had a deep, dark, nasty double dip recession. We are today at a 42-year record, but we are not even close to the 1981 record yet. Could we get there? No idea. Anything is possible. But yes, folks, 1981. I keep highlighting, folks. Go look at 81. Go look at the stock market. Go look at inflation. Do cumulative math. Do adjustments. Do real versus nominal. It is all there for you. Next, I want to talk about something I am thinking about. So I had a great conversation with a new investor yesterday, Michelle. I think it went live at 5 p.m. Check it out. She got on and she asked me all of these great questions. She asked about buy box. She asked about daily discipline. She asked about license. She asked about all kinds of great things. And after that conversation with Michelle, I had an idea or a thought, and I want your feedback. I think something I could do if there is demand. I am playing with the idea of doing a 2-hour webinar, probably on a Sunday morning, where we go deep and create a buy box and start doing our spreadsheets together. I will do it from scratch. I will get engagement. Some of you will pull up and show me what you're seeing, and we will go deep in understanding what a buy box is, what you should look at, what you should document. Now, to be clear, this will be something paid. I'm thinking $47, something like that. But let me know, is that something you would want, where we would get on a Zoom call together, probably limited to 100 people, maybe 50, where we just go deep. I teach, then you give me feedback, we go further. Just a way, because again, I think one thing that is important today is understanding the power of the buy box and what not to do. For example, something that Michelle asked yesterday. What happens if my buy box didn't change day to day? Well, the answer is, great, note it, move on. Don't go, hey, Michael told me to do 20 minutes, let me look at something else. Your buy box is one and only one until you can clearly articulate what a good or great deal is. So again, it's something I'm thinking about. If there's no demand, no interest, I certainly won't do it. But if you would benefit from a 2-hour deep dive interaction where we get on the phone or Zoom together and answer your questions on buy box and tracking, let me know in the comments below. I would love to hear from you. So lastly, let's do some congratulations, folks. One rental at a time is a community. We should all congratulate each other. I want to congratulate both Michael and Tina for getting their next deals. Michael and Tina, your cards will be in the mail. If you've closed a deal and one rental at a time has helped you, all you have to do is let me know. Get me your address. I suggest DM on Instagram or email on my website. And I too will send you this. And never forget, if you got your first deal, you get an extra special golden ticket. So again, golden tickets are first deal. These are for your next deals, and you can get as many of these as you want. Michael and Tina, congratulations. Cards will go out today. Folks, like, subscribe, comment. Be a part of the One Rental at a Time family. We do the work. We only do great deals. We are trying to build wealth together. All right, everyone. Take care. Bye.